You're all very welcome to our Buy-to-Let breakfast briefing. Fantastic to be back in person again after a couple of years. Definitely prefer the in-person events compared to doing this via webinar. And we're really excited about the lineup that we have today to talk about a very, very interesting market at the moment. The market at the moment is characterized by massive demand, chronic shortage of supply. We have, huge political focus on a housing issue, which is going to be very significant at the next election. And then we have other interesting sort of trends and movements in the market with elements such as remote working and changes to consumer demand, consumer behavior. So to help us make sense of all of that, I'm delighted to introduce Professor Ronan Lyons from Trinity College Dublin. Ronan is familiar to everybody in this room, and we eagerly follow all of his contributions to the various different forums and media outlets that he's very active on. Rowena Quinn, a partner from Hunter's Estate Agency. Delighted to welcome Rowena back to our panel. We've got Breen Purcell from Field Fisher, and Breen's a partner at Field Fisher, and Angus Burns, who's an advisory partner at Grant Thornton as well. So what we'll do is Ronan will present on the market, and then we'll have a Q&A session afterwards. So without any further ado, I'll hand you over to Ronan. If I could just ask you to switch off your mobile phones as well, and then we'll follow up with a Q&A. Thanks, Ronan.
Thanks very much, Ray. And you said no more than 6 hours, isn't that right? Yeah. Minimum of 6. Trying to come up with a catchy title, and this is what I settled on: present tense, future perfect, with a question mark. I think it's fair to say that the housing market, a bit like the broader economy, is reasonably tense. Like, it's probably the housing market is probably the top political issue. That if the government could solve one thing and nothing else, it would probably pick that, and it would alleviate a lot of its woes. So what I was hoping to do over the next 25-30 minutes or so was go through a medium to long-term perspective on the market. That's not to say I'd ignore the short-run trends, but in a weird way, it's easier to be at least a little more sure about what you think might happen in 10 or 20 or 30 years than in 1 or 2 or 3 months, right? Because over the longer term, the fundamental factors should determine what's going on. I'm not 100% sure what's going to happen in the next month or two. Who knows what could happen in Ukraine or elsewhere that could change the market conditions, or indeed something could happen in the European financial system or anything, right? They're shocks. So I'm not going to ignore the short term at all, but I want to try and paint a longer term picture. And part of it you can see from this, which is a graph I've shown before. If you've been to one of these before, you might spot 1 or 2 that are the same but updated. There are also a few new ones in there. My view on the market it's not exactly the same as it was 2 or 3 years ago, but it also is not completely new either. So there's a bit of a mix. I don't know if there's anyone standing who wants to sit. There's a few seats up here too. This shows the average gross yield for residential real estate at the start of the year by market and by bedroom number. So much to the annoyance of the AV people, I'm going to leave the mic and try and walk through a couple of things. So they're ranked from the cheapest market to the most expensive market for a particular property type. So say for a 3-bed semi, Roscommon for a long period, the cheapest in the country, all the way up to Dublin 2, Dublin 6, and Dublin 4, the most expensive for a particular property type. And then for any given market, there's 4 dots, which are 1 to 4 beds. And the first thing you notice is it does actually go in that order: 1, 2, 3, 4. In almost every market, it is every market, and one last look. In every single market, the gross yield on a 1-bed is higher than on a 2-bed, a 3-bed, and a 4-bed. And the other thing is, as you get moving to more expensive markets, on average, whatever the yields are for a particular type, they tend to go down. So there's a couple of ways of looking at that. It's not kind of mutually exclusive, but certainly the more expensive markets, there's less of a risk premium because they're more liquid. There's a greater ability to resell. So that's one way of looking at that. The more expensive the market, the easier it is to get in and out, and therefore the less uncertain you are about the future, and therefore the lower the yield you're willing to take, and vice versa. And that explains, I think, the geographical pattern. The size pattern you could read in a couple of different ways. And I think, again, it's not one or the other. I think it's a bit of both. The first is the tax treatment of owner-occupiers, not that you get this necessarily from listening to the airwaves, but the tax treatment of owner-occupiers is incredibly favourable. Right? They don't pay income tax, they don't pay capital gains tax, and owner-occupiers are principally interested, more so than investors, interested in 3 and 4 bed homes. So they will bid up the yields that an owner-occupier needs, if they think in those terms, is lower than the yield that an investor needs. So the bigger the property, the more likely you are to be competing with an owner-occupier, and they're likely to take a lower yield, if you think of it in those terms, and that's what affects that. The other way of thinking about it, and this is one that I'll come back to, which is not necessarily about tax treatment, but about the underlying nature of demand, or the mismatch between demand and supply. And apologies if I say this too often, but I do think it's a really important point for the Irish housing system. We simply do not have enough housing for smaller households. So there is pent-up demand, in particular in the rental sector, for 1 and 2 bedroom properties, because there is a chronic undersupply of dwellings for 1 and 2 person households. So I'll come back to that. But so there's a lot of information, right? You could probably ask 20 different housing market analysts, look at this chart, and they'd have 30 different stories. Right? But there's 2 or 3 that I wanted to highlight. The one that I think is probably key is, why is it 1 to 4 beds stacked on top of each other? It doesn't really matter where you're looking in this country. There isn't enough housing for smaller households. And as I said, there's a location thing layered on top of that. But location and size are kind of 2 key themes that I want to come back to. These, after we look at the market conditions and after we take maybe a kind of a medium to long term look at the need. Today's is an auspicious day. It's Christmas Day for nerds, right? It's the new census results. The preliminary ones come out. I'm sure you've blocked off your afternoons to analyse the latest figures. That's unfortunately what somebody like me has to do. So that will update when we get onto the housing needs stuff. That will update things a bit. But this is looking at the kind of the medium-term trends. So these are average prices. Now I've taken up the dashboard because I've worked with the figures or whatever. But you could do it with the CSO to get the same pattern. With slight differences. You get the same pattern for prices by region. This is from 2006 through to now. You can see the fall about 55%, and then a rise of about, it depends on where, but about 95% rise since. And so still about 20% for that. So you see if you're going more than half, it needs a bigger increase. You go down to 90%, you go by 1,000% to go back to where you were. Just the law of maths. And this is just looking at it annually and quarterly. You can see the double dip here, and I'll come back to it in a second. You can also see a number of quarters of growth. The blue lines are the quarters there. And what you notice is typically when the market is a bit seasonal and you get hot and cold quarters. For the last 2 years, and there have been no cold quarters, which is kind of unusual and tells us a little bit about the impact of all the excess savings. Right? Not everyone, but a lot of people in the economy were sent home to work from home and not allowed to spend any money for a few months. And other people had their income supported. All of that is you're paying more to get less work done, right? Brutally put. And then you open the economy up. And what are they going to spend all their accidental savings on? They may spend some of it on holidays, or indeed new cars or second-hand cars. But often they feel like they have to put it into something worthwhile, redoing the house or buying a house, buying a home. So, I'd highlight that as kind of unusual that we've had as many quarters in a row of quarter-on-quarter growth. The next staff report is out on Monday, so you can have a guess as to what you think that might say. This is the rental report, to the exact same graphs on the rental side. You can see the pattern is similar, like overall up to about 2007, and then a fall and then a rise. But if you go back and forth, you can actually see the dynamics are quite different. That rents now are about 50% above their peak in 2007, whereas sale prices are still about 20% below. And that relates to the fact that there's only a single dip here. The single dip compared to the double dip. But the first dip is the real economy. People are being made unemployed, incomes are going down, bonuses and overtime, all that kind of stuff. Everything, all of that feeds through into lower housing demand. And that will be true in the sale segment and in the rental segment. But going back to the idea of yields, to the extent that you could summarize all that in one number,
You have an average yield for housing in Ireland. The average yield for housing in Ireland, some of you will have
Experienced this, pre-EMU, pre-Eurozone. The average yield on housing in Ireland may have been 10 or 12%, all in. It went down as we entered the Eurozone, and it kept going down, and it went too low, effectively. It went down to about 3%, all in, and then it had to correct.
So the fact that prices fell twice as much as rents is the yield correcting.
Right. There was a real economy hit and there was a financial conditions hit, and that meant that prices had to fall further than rents. And I think one of the things that frustrates me about the housing policy debate at the moment is that you get this point that's made, oh, well, if supply really lowered prices, surely it would have done so in the early, mid-2000s when we were building loads of homes. But that point is being made solely about the sale side, when in fact, if you break it down, credit conditions were pushing prices up as supply was trying to push them down. Credit conditions won. Right? Credit conditions eased by more than enough to keep pushing prices up, even though there was lots of additional supply. In fact, if you think of it as a three-way race, you've got credit conditions, income, and supply. Income and supply more or less traded off against each other. They netted each other out. Right? Overall income in Ireland went up by about 50%, and supply went up by about 50% over the course of a 10-year period. So it basically netted each other out. What didn't net out was the fact that credit conditions also eased. So you needed a 2% deposit rather than a 25% deposit. That pushed sale prices up. Then, of course, that changed, and prices came down again. But if you look at the rental side, rental prices did fall with all the extra supply because credit conditions don't really matter in the rental side. Right? You can't borrow against your future income to pay the rent today. So that supply point, I think, is a key one because of what it misses. Rents did actually fall, even though the economy was booming because we were building enough rental homes. I think that's a key point for today. We're grossly understocked rental housing, as I'll come back to.
The other point is that with a little dip for COVID, it's been steady in terms of increases. Rents just keep going up.
There's no hot and cold markets per se. I mean, there's seasonality in the rental market, but it doesn't affect the level of rents. It seems to affect just the number of transactions. So the busy periods, lots put up in April and May ahead of the next academic year, and then there's quiet periods around kind of November, December, where there's a lot less on the market, and that happens, but it doesn't seem to affect the price level, and the price level, bar COVID, just seems to keep going up. And when you look, these dots are a little
light, but you get the overall picture. This is the availability on the sale market in Dublin, the availability of the rental market in Dublin. I picked Dublin because it's a coherent market. You do the same for Cork or for Limerick or for Galway, you get the same picture. It's the number of homes for sale on the first day of the quarter and what happens, sale prices or the rental prices that quarter compared to the year before. And you can see the more there are, the less upward pressure or the more downward pressure there is. Supply, availability works. The more there is available, the more likely you are to have greater affordability. And if you want to look at where the sale and rental markets are at the moment, the Dublin rental market is about, certainly the sale market is about here.
There we go. I knew I'd get caught eventually. So if you look, 4,500 is like the magic number, right? Like that's at least based on past trends. It's not a magic number, just in case we're recording. So where the availability now is a little bit less, so you'd expect some upward pressure, but not a huge amount of upward pressure. Slightly less accommodation for sale in Dublin than you'd want based on the trends over the last 15 years or so. In the rental market, the magic number, if there is one, is about the same. It's about 4,000. That's how many rental properties you'd want on the market for there to be no upward pressure. This actually only goes to the end of 2021. Availability in 2021 was down around here. It had gone up with COVID and then come back down. It's actually gone all the way, this has gone all the way down to a couple of hundred. Right? It's basically unprecedented, the lack of homes available to rent. And there is, there's a rebuttal to that, which is like, well, you're not counting the new multi-unit rental stuff. So the new blocks that are opening, they don't advertise on DAF the same way that if you had the same block but split into 100 individual buy-to-let investors, they might have 100 ads. Whereas, but you can correct for that. You can add in the new stuff that's coming on, and it's still, you get nowhere close to back into healthy territory. You might double the number that are truly available, but you don't change the doubling from 400 to 800 is still incredibly tight rental supply. So, I mean, this is not a bad heuristic to think about, right? How would we ever get to a place where the Dublin rental market would be back up here? Right? It's not from recycling the existing stock. Right? There isn't some sort of magic way of getting the existing housing we have and reorganizing it in some way that would just get a lot more liquidity, because the economy is not the same as it was 15 years ago. If you take somewhere like Dublin or Cork, it's a significantly bigger city. There's a lot more economic activity. Ironically, the cities haven't grown as much as they could or would or should have, because the housing hasn't been there. So you get more people working at a greater distance. And COVID perhaps has facilitated that, made it less painful, right? That if you only have to be in work once a fortnight or once a month, then maybe you will contemplate living further away. That's not necessarily how you'd want to organize your housing market. Well, we'll push people really far away from their family networks and their amenities just because we couldn't be bothered building the housing close to those, so we'll get them to live somewhere else. People are moving away not because they want to move away, they're moving away because it's cheaper, which I think is a point that gets missed a little bit. I mentioned the census. How many new, like I talked about getting up to 4,000 on that last slide in the rental side, or getting a little bit higher on the sales side. How many new homes do we need a year? So I have a bunch of numbers on the right-hand side there, and the first three are the kind of the range of population projections based on the last census. So in the 2016 census, there were figures that told us about mortality and fertility and migration and so on. And then the next year, the CSO produced these different scenarios for migration, M, and fertility, F. And they have, that's the high migration scenario, which is 30,000 a year moving into the country. That's the low migration scenario, which is 10,000 a year. And this HNDA number is the number based on the ESRI's work for the housing need and demand assessment. So this is effectively government policy here. That's implicit. If you're under the hood, the government figures say that it expects the population between 2016 and 2040 to go up by about 830,000 people. Now you'll see, firstly, the range is quite big in the official projections. How many more people will we have between 2016 and 2040? Official projections that are now 5 years old say somewhere between 700,000 and 1.3 million. That's a big range, right? So straight away, you want to ignore, is it Lyndon B. Johnson supposed to have said, ranges are for cattle, give me numbers, right? We need to go back to ranges, right? It's not a number. There's no number I can give you that is definitely the number of homes we will need, right? Because I just don't know. What I can do is I can say to you, what are the likely parameters that will affect that number, and how far out are they? And the reason I have other numbers in here is because in 2020, knowing the census wouldn't happen in 2021, the CSO went off, had a look at various administrative data sets, Department of Social Protection, Revenue Commissioners, and so on, and said, how many people live in the country right now? And what they came up with was a much bigger number. Right? There was I'm going to get this wrong now, but roughly 4.7 million people in Ireland in 2016. The projection for 2019 or 2020 was 4.9 million, plus or minus maybe 100,000. Right? You wouldn't expect to get it that wrong. Even the high and low migration scenarios wouldn't have had that much time to work in a big difference. Turns out 5.2 million people were living in the country in 2020. So they were out by an order of magnitude in terms of the number of extra people in the space of 3 years. So, which tells me not that, I should beat up on these guys because they got it wrong. Rather, it tells me that if I'm designing housing policy, I want to allow for the fact that we could be really wrong in the number of extra people there might be on this island in 20 or 30 years' time. If you take their number and project it forward with standard migration or whatever, you get 1.6 million extra people, twice as much as official housing policy, which was designed after these numbers came out. So, okay, then of course you've got Ukraine. So I have this is called IPEADS. I've added a U at the end. What if 100,000 Ukrainians come here and stay here? I'm not saying they will, but they could. That would of course bump up the population a bit. But actually, they wouldn't just come here. They're coming here at a certain age cohort. So you've got a lot of teenagers and kids. That of course, if they stayed here, they would have their own families, right? So they would affect the fertility rate, and you could end up with 2.5 million extra people by 2040. And the point is not that I think it's definitely going to be 2.5 million, not 800,000. The point is that's entirely plausible,
just as plausible as this scenario. But with the really bananas thing, technical term, the really bananas thing is that this number is treated as a maximum in housing policy. They've put in the HNDA, you will not build more housing than these numbers. Why? Well, I mean, it's good for an investor, right? If you actually get some of the scarce housing that's been built, given as monopoly rents, right, and the system is designed to stop new housing getting built, it's happy days. It's not a healthy system, though. And I suppose it leaves, the unhealthier it gets, you're exposed to regulatory risk, right? Somebody's going to come along and expropriate it or something like that because that's what the voters want, because something has gone wrong. What's gone wrong is they've set this as a maximum. Why have they set it as a maximum? That's kind of more speculative, but what I think has happened there is in the Office of the Planning Regulator, there's key people whose formative years were in the early 2000s. So their experience of planning is shaped by, well, if I don't have a really tight rein on this, who knows what they're going to suggest. They're going to build 5-story apartment blocks in some small village in the Northwest. Because we know why that happened. That happened because of tax reliefs, not because of sort of the financial markets let loose will go off and build a whole lot of 5-story, 6-story apartment buildings in small Irish villages. It was tax policy that drove it. That tax policy is no longer there. That's not a risk, as far as I'm concerned. The credit markets are smart enough now, if they're lending into the, not just the capital markets, are smart enough if they're giving financial resources into the Irish housing system. They're doing so on pretty rigorous analysis of what they think the underlying maths are for it. So a kind of a complete misunderstanding of what happened in the early 2000s is haunting the Irish system today, because this number is a maximum. I mean, you could say that number, okay, that number is a maximum. And I probably would find it hard to disagree. I'd say, okay, I could probably engineer a system where, or a set of numbers where you could get more of an increase in the population, but that probably is the maximum. Right? That there's all these extra people, and we get extra Ukrainians coming who stay and who have sufficient numbers of children that it pushes it up, right? But not one of these, right? Minimums, maybe, right? Set that as a minimum. That makes sense, especially when you think about this. The more housing it is, the more affordable it is. Why would you set a maximum? Set a minimum, right? We should be building at least this number of homes over the next number of years. Now, I've made a sort of an elision between number of people and number of homes. I guess the point I wanted to make here is that the number of people matters, and we're not sure about the number of people that we're going to have over the next 20 years or so. And that uncertainty should feed through into policy, and policy should have very wide ranges of the number of homes that could be built, rather than picking a number and saying that's the right number, or indeed that's the maximum number. That's these first two sources of housing need. The second two sources of housing need are obsolescence of the existing stock, which in turn is related to internal migration. But Italy doesn't have population growth at the moment. It doesn't even have changes in household size. What it does have is internal migration. Internal migration is associated with obsolescence of your existing stock in, say, rural areas and villages, and a need for new housing in the cities. But the key factor here is actually the headship rate, or the household size. How many people per household? And if you think about it, even with a fixed population, if Ireland had 4 million people and rearranged itself from households of 4 persons to households of 2 persons, it would need twice as many homes, and the homes would be different. You need, crudely, you'd need 2 million apartments rather than 1 million houses. Not uniform, but you get the idea. And that's roughly the journey that all high-income countries are on. That they had 4 people or more in every household in sort of the early 20th century. Most high-income countries are already at the point where there's about 2 people per household. Ireland is stuck way up above that. I'll come back to that in a couple of minutes. Even taking one of the numbers from the left-hand side on the last slide, so taking a lower population estimate and running through parameters for obsolescence and household size, where do we think we're going to be by mid-century? This gives you the range of how many homes would you need to build based on higher or lower obsolescence and higher or lower household size for the baseline scenario that they had in 2017. And you can see the numbers run from roughly 40,000 a year to 60,000 a year. Right? And kind of the middle, as I've designed it anyway, is about 50,000 homes a year. So sometimes you might hear or read me say that we need somewhere between 45 and 50,000 homes a year. That's based on this kind of framework. I could get you a higher number. that's not I'm not there to engineer a number that's higher or lower. I'm there to kind of give what I think is a reasonable parameter. I think if we built 50,000 homes a year, we'd have a much, much healthier housing system. And I don't think there's any prospect that if we built 50,000 homes a year for 30 years, we would be somehow in some glut of housing, too much housing and not enough people. If we have faster population growth, we would actually need to get to that kind of end point of having something like 3.1 million homes by 2040, not by 2050. Right? So we'd actually need to build those homes faster. So you're talking about 60 to 70,000 homes if you're on the right-hand side of the last chart rather than on the left-hand side. So two things there. We don't know how fast population is growing. And again, I get it, right? If you're Ireland, it's Ireland. We lose people every decade. Right? That's our thing. We did it from the 1840s all the way through to the 1980s. Why stop now? So it almost seems like an exercise in dangerous optimism to think that the population is going to go up. Right? So everything, student numbers, school numbers, overall population, nursing home needs, everything is based on, well, let's not assume we're going to have really rapid population growth, but we need to realize that if you don't assume rapid population growth, there's a cost as well. That if by not realizing that we're actually in a century of growth rather than a century of decline or a century of stasis, that all sorts of growing pains are going to arise. We're not going to have the infrastructure, whether it's schools or hospitals or nursing homes or housing in general. So you can see that this is the 40 to 50,000 a year. That's just converted into quarterly, and this is the number of homes getting built. And you can see from 2015 up to 2019, there was a big improvement. And then since 2019, it's been sort of ups and downs, right? There's certainly no upward trend. It's just volatile. And some of that's, most of it is disruption in the supply chain, first for COVID and most recently for the war in Ukraine. But I would add in on top of that, that as the system has moved into wanting to build apartments, which we'll come back to, and in particular wanting to build rental apartments, there have been new ways found to stop development from happening. Right? So judicial reviews, I think Hooker Macdonald had an estimate that up to 100,000 homes were affected. I think 10,000 or 15,000 directly, but they had knock-on consequences for up to 100,000 homes that are effectively stuck in judicial reviews. And there's one off in the European Court of Human Rights, I think. There's a lot of stuff happening that didn't happen 5 years ago and doesn't happen in Denmark or Spain or other places today. So it's not just supply chain disruption. I'll come back to that towards the end when thinking about the homes that aren't getting built rather than the homes that are. But we're still well below likely need. Now, I'm sort of pinpointing people stopping homes getting built. That's not the only reason. Right? It is expensive to build apartments. Ireland has some of the highest specs in Europe for kind of your minimum 2-bed apartment, say, both from an energy efficiency point of view and from kind of a size and amenities point of view. And some of that is effectively a reaction to what got built during Section 23, right? That you had, crudely, to caricature a little bit, you had Irish house builders that were largely kind of family firms that became successful drifting into building apartments without necessarily experience in building apartments. Whereas now what you have typically are international firms that build apartments elsewhere coming into Ireland to build apartments. Right? So it's a very different sector. But what's happened is Dublin is this blue line, and it's significantly more expensive to build housing in Dublin than it is in Belfast or Edinburgh or indeed Toronto or other places. And this is data from one particular developer that works in these 4 cities. It's a few years out of date, but they tell me if anything the picture is worse now. But they actually broke down the costs in these different places into various headings, structure and facades and so on. And even if you take out the VAT, Dublin is still most expensive on all of the headings. So there's something gone really badly wrong in the Irish construction sector in terms of costs, and nobody can really fix it, or nobody can at least identify at the moment how things will get fixed. But it acts as a huge constraint on building the housing we need, because we need in particular housing for 1 and 2 person households. This kind of puts it into like what you might call a micro market perspective. So each of these triangles is the average rent for a 2-bedroom apartment in different micro markets. This is Grand Canal Dock up here, and this is somewhere else in Dublin 4, Dublin 2, and so on. And then you go down, it's Dublin, Cork, and Galway metro areas. So that's Athenry down here, right? And there's 3 sets of them, 2016, 2018, and 2020. And then you've got these different horizontal lines. And those horizontal lines are the break-even rent you would need for different types of parameters. Right? So if you take this line up here, it's 100,000 per unit, per apartment in site costs, 2,000 per square meter in build costs, and the investor wants 6.5% out the other side as their return. And you can see, if you go back to 2016, there's only a couple of markets where it's viable. And then rents went up, and you get more places that are viable. Then the government, well, you've got 50,000 to 100,000. That's your sort of range of viability, how much you're willing to bid on a site, that kind of thing. And then the government introduced build to rent and moved from kind of investors that were looking for this amount, 6.5%, to investors that are looking for 4.5%, so pension funds. And that had huge kind of transformational effect in terms of bringing these lines down, right? So all of a sudden, all of Dublin is viable, and indeed into Cork, even Cork is viable. So that was a win, right? It should have been a win. Who knows if that win was going to be around in 2 years' time? If the kind of inflationary environment is different, it may be the case that getting 4% on Irish residential real estate is no longer enough, because you can get 3.5% on some relatively safe European countries' government debt, right? If that's the case, then whatever win we had is gone, right? And you're kind of heading back up towards these other lines. Right? That's kind of what you don't want to happen. But the point here is that rental inflation can help, but really the solution, right? When you don't have direct control over yields, the solution is to reduce your construction costs, to have an efficient construction sector. Some of that might be regulatory, and some of it may be to do with the supply chains in the system itself. Speaking of destinations, we're trying to get up here, right? Back to this. This is how many homes are built, over the long run. This is from World War II. How many homes are built per household over the last few years? Right? So, per 100 households outside Dublin was building 6. Right? It's quite a lot, given it had only been 2 or below 2. But what I like about this chart is, he likes his own chart, you heard it. What I like about this chart is that you can actually see when Ireland stopped urbanizing. Right? This is Dublin here, and this is the rest of the country. Right? And it's hard to pick out the other cities to kind of add them in, because the municipalities, the city council areas are not the same as the true cities, so it's kind of a little bit tricky to do. So I'm using Dublin as a kind of a proxy. But you can see, in the 60s, up into the mid-70s, Dublin was building more housing than elsewhere in the country. The net effect was that Dublin housing was no more expensive than the rest of the country. Since then, Dublin has been building less than this yellow line here, or at least no more. And indeed, in the bubble, Dublin was only building about as much housing as it was building in the early 70s per household. The rest of the country was building 2 to 3 times as much as it had built in the 70s. That's where the excess supply happened. And then, of course, they fell down. Dublin is a little bit above now, but all of this lack of housing in the urban areas compared to the rural areas has meant that Dublin housing has gone from being no more expensive, or 10 or 15% more expensive, as late as the 1990s, to twice as expensive now. So, sort of, for me, that's kind of proof that, firstly, you need to get this number up here, and secondly, you need to get urban housing way up. Not just Dublin, Cork, Limerick, Galway, Waterford. Housing supply needs to get way up in order to kind of get that down. I say that, I don't think it's necessarily going to happen anytime soon. Right? So I don't think we're going to get to a point where Dublin housing is as cheap as it is elsewhere in the country. I mentioned at the very start about location and mix when we were talking about the yields. And this is just one other way of seeing it. Dublin has become a net exporter of people to the rest of the country. You don't think of cities doing that. You think of cities being kind of sinks where people go. And back before modern health infrastructure, it was sinks where people went to die, right? I'm going to live in a city, it's going to be more fun, but I'll die younger. Right? That was basically what cities were. Now, we've got decent health infrastructure, so that's not, you get to live as long in a city as you do elsewhere. But it is no longer a sink. Irish cities are no longer attracting people. They're sending people out, which is kind of funny when you think about the typical Irish politician. Is their view of the housing system is, well, we just need to get people home. Right? Irish people are homing pigeons or salmon or something, and they need to go where they respond back to beside their parents, and they'll get a home there. Well, if that were true, you should build a lot more housing in Dublin, because we've been sending these dubs off to Cavan and Wexford and other places when really they just want to be close to their family and friends. Right? And so that's one thing. And the other thing then is about the mix, which gets me onto the demographic mix, which gets me onto the type of housing. It's not just that we're under providing urban family homes, say. It's also like, if you look at the population, how many people were we adding by age group? 40s, 50s, 60s, 70s, you were adding kids. Right? So yeah, you build family housing. 80s, 90s, 2000s, we were adding young adults, but we didn't build the housing. We built about 1 million homes in between 1990 and 2015, but of those 1 million homes, about 7 and 8 were family homes, and the vast majority of those were outside the cities. What we needed to be building was 7 and 8 homes for smaller households, and in the cities. And then as we go forward into the 2050s, we will be adding 70, 80, and 90-somethings. Right? And they do not need family homes. They need some other kind of housing. Not that everyone who's 70 is going to move out, but currently we have the opposite problem. We have no housing options for people who do want to leave their family home, or next to none. Okay, so this is if you were here a couple of years ago, you will have seen this chart. And this is just, you might even remember me pointing at the Shetland Islands, not on the chart, but the Shetland Islands has more of its housing in apartments than Ireland does. Right? So in Europe, on average, about half of the housing stock is apartments. In Ireland, it's about 12%. So we're way undersupplied in that kind of housing, and it's because we had a falling population. We didn't have to do density when other places were growing rapidly. And this is just the household size thing, 2.75 or so. We'll find out today what the new number is. But my estimate, when you look under the hood, you can look at households by type. And if you look at households with unrelated persons in them, right, you've got 4 young professionals or 6 students sharing a home. Right, that's pushing up the number. The true household size is probably about 2.4 in Ireland, which means we're missing a lot of housing, for smaller households. I'll skip that because I've basically made the points. Okay, so looking ahead, there's 2 lines in each of these charts. One is for national and one is for the Greater Dublin area. And let's just focus on the national one. It's a little bit neater. Basically, the solid line is how many homes get built by year. And the dashed line is, if you had looked at planning permissions and sort of tracked them ahead, one-offs take a certain amount of time to get built, estate housing takes a certain amount of time to get built, and apartments, maybe they don't all get built, but it takes them a little bit longer again. If you do that, you can track quite well up to 2019 the number of homes. And after 2019, we get this split. Right? The permits, we can look forward, right? The permits suggest that lots of new homes should get built this year and next year. But it suggested that the number that was going to get built in 2021 would have been a lot higher than it was, right, up around 26,000 rather than the 21,000 that got built. So something broke. In a way, we could hope it was just the supply chain stuff, because that can get fixed. But if we've broken how to build apartments because we've added in all these extra checks, then it doesn't. These numbers in effect don't matter. You can have planning permission for 40,000 apartments. It's going to turn into maybe 2,000 or 3,000, right? And that would be the worry: is that just as we started getting the kind of housing, approving the kind of housing that we needed to get built, that the link between approvals, permissions, and the rest of the construction system breaks. And you can see it in Dublin in particular. It's even more Dublin area. It's even more acute, right? This is where the apartments were supposed to be built. One thing is there are about 40,000 or maybe a little more, maybe 45,000 apartments, broadly speaking, in the pipeline. And almost all of those are in the Dublin area. I think there's a couple of ones in Cork. In fact, I saw one earlier in the week. Is it Dairy Gold are developing a site on the Kinsale Road. But by and large, they're in the Greater Dublin area, and most of them are in County Dublin. So if those 45,000 got built, would we be in a situation with a rental market with a glut? Certainly, if they got built overnight, yes. They're not going to get built overnight. They're going to get built over the course of 5, 6, 7 years, I think. And then you can start to look at the pipeline. Right? What is the pipeline? How much does the market process? And it goes all the way back to that scatter plot at the very start. Right? You're trying to get your rental sector, the dots, right? You're trying to get up to 4,000 coming on the market at any particular point in time. And And doing that exercise suggests that Dublin is short around 60,000 rental homes, and there's about 40,000 in the pipeline. So if 40,000 got delivered over the course of 5, 6, 7 years, which I think is an optimistic scenario, I think there's downside risk to that, won't happen faster, then I think we're not going to be in a position, certainly not going to be as bad as it is now, but we're not going to be in a position of a glut of rental housing. Dublin has grown too much over the last 15 years for a relatively small number of rental homes in the grand scheme of things. It's a city of 550,000 households. Adding 5 to 10% of that over the course of 5 years is not in any way a glut. Okay, so to close, lots and lots of graphs. Let's close with some pictures. This is your life. You live with your parents, you get a 3-bed semi-D, you go to a nursing home, funeral home, done. So that's the Irish housing system as of 2000, right? Where do we want to go? We're still going to need, it didn't come on one by one, that's all right. We're still going to need the family home. We're still going to need the nursing home. But the funeral home's gone, so immortality. But we're going to need 6 other kinds of housing that we don't really have. And the 6 kinds of housing that are for smaller households, right? Students live on their own in a unit, in a purpose-built student accommodation. Co-living, right? Remember co-living? It's not going to happen for the next while, but we have to come back to that at some point. Urban core housing. So that's Capital Docks. That's Bushy Park House out in Terranure. And if you look at the demographics in the census for Bushy Park House, it's lived in disproportionately by over 55s. It's this idea that Irish people won't live in apartments, or maybe younger people will, but older people won't. The data do not support that claim. That Irish people will be happy to live in apartments if they're to the right spec in the right area. So that's in Dublin, that is not. Right? That's somewhere in the States, but that's an independent living complex, which I think of as you're in your 70s, but you think you're still in your 60s. Right? So you don't want golden years and old people staring down at you from the billboards, right? When you go in, you want to think you're hip, you've got your yoga parties and so on, your barbecues, right? That's what this is. Actually, kind of can't wait to move into one of those. This is your golden years. That's assisted living. Again, there's types of housing we just don't have, right? So going from uniformity to diversity, right? That's I think the challenge for the Irish housing system at the scale we need. So I apologies, I went a little bit over time there. A shameless plug for economics of the property market. If you want to learn more, an online course there, and I'm happy to tell you more about that. I'm looking forward to the discussion. Thanks, Ray.
Okay, that's terrific. Thank you very much. Okay, so we'll kick off with some Q&A now as well, and with some sort of questions that people had submitted in advance of the event. So maybe just starting with Rowena, just give Ronan a little break. Just it'd be very, very interesting just to get an insight into what part of the market is really seeing the strongest demand at the moment, and also if remote working has had a significant impact in where you're seeing demand in the market.
I think there's a demand presently across all sectors, Ray. You have young families over the course of the last 2 years where there's another child, so they're now a household of maybe 4 or 5. They have a dog, so they need to trade up. Equally, we can see some of our downsizers who, again, over the course of the last couple of years, realised they're living in a house with 3 or 4 or 5 bedrooms. It's surplus to their requirement. And what Ronan said, they're now more keen and more likely to move to apartment living, provided the apartments are being built in the locations they can stay with the same infrastructure and the same amenities. But across all sectors, there's movement, and there's plenty of movement, provided the price is right. I think what we may have observed over the last number of weeks and months is there's been a slight push upwards in terms of pricing, in terms of asking prices. And what I would say to anybody is to be realistic as opposed to optimistic in terms of pricing. Those with the money, those with the funding, those with the mortgage approval, they will ultimately decide what they're willing to pay for a property. We had an instance, and I think I discussed with you, Ray, a couple of weeks ago, where a property came to the market, nice location, it came on at 1.695, and 7 of the 8 parties registered to bid were cash buyers. And they were downsizers predominantly, with a couple of parties moving into the country from outside. But that property sold 600,000 over asking price to a cash bidder. So there's a phenomenal amount of cash. There's a phenomenal amount of funding. I think people are in a better position than ever based on the savings over the last couple of years to secure the lending, to secure the funding. But our experience is that the duration of time for the funding to come through, the duration of time for the closing of a sale has become longer. Everything's become more protracted over the last couple of years. In terms of people's lifestyle choice and where they want to live now, they want to be by the coast. Everybody's taking up sea swimming. They may no longer need 2 cars because they're on their bikes, so 1 car will suffice. All of a sudden, the suburbs moving further out from D2, D4, D6 has become more popular because they realised over the course of the pandemic that their garden maybe was too small. They wanted the off-street parking. They needed that home office. They needed the playroom because the open plan didn't work when you had 3 children doing homeschooling and 2 adults trying to work. So the shift outwards has become greater, and the need and the want to be able to have that space, to have the home office, is certainly one that we're seeing all the time. Coupled with the fact that for many, they're no longer travelling into the city on a daily basis. It's maybe once a week, once every 2 weeks, once a month. So I think the suburbs and the coast is where many people want to be.
Okay, thanks very much, Rowena. And Breen, one trend that we've seen a lot of recently is just a real sense of urgency amongst buyers and sellers. And we're still seeing auctions of properties. Some of the online auctions are still functioning well. Just wondering if there's advice for people in terms of trying to help solicitors to speed up the process. What can people do to really make that faster?
Yeah, well, there's a number of things. As the legal providers, we always get into trouble for slowing things down. And I can hear there's a lot of agreement in the audience, that alone. But what I would say is there are ways you can help your solicitor get that process started. And what I would suggest is that if I was to say one thing, if you're selling a property, is get your deeds up early from your lending institution or wherever you hold them, and get them into your solicitor early, even before you put the property formally on the market. It shows up an awful lot of things. You get them into your solicitor, and your solicitor can review them then and see what the issues are. And of course, if you have more time, you can fix any issues that appear on the title. And these would be things which you mightn't have considered, small extensions you put on, conservatories, things like that. Development within an old dwelling in relation to multi-lets, that type of thing. And your solicitor should send you out a checklist then to say, can you address the following for us in advance of putting the property up in the market or whilst it's up on the market? Things like local property tax for multi-units within one building, those type of things, they all take time. And it's right, an awful lot of clients would give out because the question is, well, why didn't you tell me this earlier? So, as a vendor or as a purchaser and not as a legal person, you expect to be led on that. So it's important that you do say to your solicitor, what do you need me to do? And a good thing, a lot of solicitors now have checklists which they give to their clients early. Do give those some time if they come out to you, because you can hit off an awful lot of things that you think are very minor or irrelevant, which can hold up a closing. The other thing I would say to you is, solicitors hate surprises. So if there's an issue or something that you know of within the property or around it or something like that, tell the solicitor. Don't say, oh, yeah, oh, is that important? Yeah, I meant to tell you that. Because that, especially after you've contracted for the sale of a property, can cause awful issues. So I would say to you, yes, of course, solicitors can be to blame for slowing things down. If you want to persevere with your solicitor, you get on to them every day. He who shouts loudest and all that, I tell you from experience. So please don't give up on us as a service provider, but do try and help yourselves by getting as much information to your solicitors as possible. You'd mentioned auctions there, and just purely from buying at auctions. Rowena will tell you one of the best ways to get rid of to dispose of properties that have title issues, planning issues, is at auction. Because a good marketing campaign will put this up there, and of course, purchasers who are keen, they might look at plans and how to fit out a kitchen maybe in this property if they were successful at auction. they rarely think of getting on to their lawyer until last minute. And the amount of calls we used to get when auctions were very popular, literally a day or 2 days before the auction, saying, I'm going to bid on a property on Wednesday. It's now Monday. Can you look at the title for me? And it's not enough time to do a thorough due diligence on a title. So, you know, you do get clients who go in and buy properties and then tell you about it afterwards. From a solicitor's point of view, that's actually quite good news for us, because the warts and all that are presented to us, we had no hand, act or part in, you know, or were we due to observe those. So it does, however, cause a lot of problems and will cost you at the end of the day, because if there are title issues, you have to get this title registered, and especially if you're banking it, there's going to be another layer of costs with the bank solicitors in doing that. So be very careful when you're buying at auction to get your legal advisor on board again as soon as possible.
Okay, thank you very much. Thanks, Breen.
Okay.
And Angus, you know, we've seen the benefits of various different structures and arrangements that are available to investors in the market at the moment. So maybe could you talk a little bit about the kind of structures that are being used by investors to access the property market at the moment?
Absolutely, Ray. Maybe just before I talk about some of those, I've to agree and listen to Rowena. People still paying $1 million, $2 million, and rushing out to buy 3-4 bed properties in the burbs. They're not been listening to the presentation at all on yields and need for apartments, and you know. But that's the culture that we're in. The other way I'd look at Ronan's presentation is what's not to like as a property investor in this market. Ronan's coming at the angle that, you know, this is did the president use the word a catastrophe? You know, because of the supply issues, because of the way the market is structured. But if you're coming in from the investor perspective, I suppose you're looking at fairly high yields there that look to be sticking around. Now, Ronan's using gross yields, and gross yields in Roscommon look great, but of course the rent is half or less what it is in Dublin. So maybe net there's a differential, but not to get into that kind of detail. That the yields are extremely strong. They don't look to be going away anytime soon. What are the biggest concerns of an investor? One is, I suppose, greater supply coming into the market, that there's going to be vacancies, that rents are going to start dropping. Well, I can't see too much supply coming in there if I'm an investor. Certainly outside of Dublin and Cork, I can't really see any meaningful new supply coming in. Another thing I might be interested in is the level of incomes. You know, can tenants afford rents? Well, in my book, we're at full employment. Okay, maybe 4 or 5%, but I mean, there's so many vacancies for jobs in the market. Things seem so strong on that front that I don't see the income piece changing particularly quickly. We seem to have a number of jobs in this market that are FDI based, maybe pharma, large multinationals. They don't seem to be going anywhere. That would give me a lot of confidence as an investor. I see huge government intervention, subsidies from government in the rental market that are competing with private tenants, and I suppose pushing up competition between the two. I suppose from a landlord perspective, that's probably good news. It means there's more money chasing less properties, and less likely to go away. So then, why the problem? Why is everybody so negative about being a landlord? Well, in my book, they're different issues. There's probably 3 or 4 issues that spring to mind. We have a regulator who rightfully is much more on top of the game in what is traditionally an amateur profession of being a landlord. Sure, there's PRB that, you know, is very prevalent in Dublin, but I think of a stock of, is it 300,000 or 400,000 rental properties maybe nationally? Is it 10-15% of, if even? It doesn't really feature as a whole. It's still very much a an amateur profession, if there is such a contradiction. So why are these landlords exiting? Well, one is RTB. The stress of getting a letter in the post from RTB. The first thing you say, geez, I want to sell this thing. Just get the hell out. This is far too stressful. You go onto the website with RTB, try to register a property. You have more headaches there. I suppose that wasn't a feature. That wasn't a feature 10 years ago. Absolutely rent control. Seeing that inflation is running at 7-8% and not being able to move rents up by more than 2%, that's a real headache. That means the future isn't so bright on that piece. Notwithstanding the very strong yields, they have to be coming down in areas that are subject to rent control. My favourite, taxation. We were at 45% income tax at the marginal rate 10 years ago. We've had USC since, and we're now at a top rate of 55% for people earning over 100,000, or 52% for most people. That's an enormous change. How do you get the bit of equity to come to Ray to borrow money in the market? Well, generally now, more than ever, because we have a very tax efficient system, you have to earn it through salary. So you're paying 52% on it. You have 48% less to come with your deposit. Great were the days when you had 100% mortgages. They're well gone. You know, much more sensible lending now. So you need a bigger deposit. You have a 52% tax hit generally for most people in terms of trying to come up with that, and then you have the second tax hit on the rents. Makes it quite hard to service any debt. We know property investing is about cash flow. You can look at the balance sheet of your property and admire the equity that you're building up through yields and capital appreciation. But if you can't afford to service the tax, the wear and tear, and the bank repayments, then it makes it quite stressful. So Ray, onto your question, how do you solve some of those troubles? Well, I can't do much about the RTB system other than to recommend that you get a professional to look after it, who actually knows what they're doing. Some really good property managers who've really upped their game of late and are able to navigate the system. That takes huge stress away. And I'd recommend that for anybody, even with one property, to give it to a professional. The other bit is around tax. And in my book, it doesn't work to be doing this personally if you're earning money at the marginal rate, and particularly if you're borrowing. Okay, so there are corporate structures that can work quite well, particularly for SME owners. You might be able to sidestep the first hit to tax by keeping property investment monies available in a group or a corporate structure. Okay, so you use the corporate to invest in the property. So immediately you're not starting with half the monies, having taken it in the form of salary. And of course, corporation tax is less than income tax. So already there's somewhat of an improvement there. My role is as a pension trustee. We use small self-administered pensions, quite different to the pension funds that Ronan has mentioned that accept 4% in the market. Generally, our investors are small self-administered pension schemes, single members, you know, a couple of €100,000 up to a couple of million. They're certainly not seeing 4% returns. They're seeing more like 20-30% returns per annum over the last number of years. How are they doing that? Well, it's relatively straightforward. They identify a property maybe in 2017, 2018, today for 100,000, let's say, generally regionally, or 200,000. They might go to Ray and look for a mortgage of half that. They look at the yield there, generally getting maybe a net 8% yield, something like that, maybe gross 10%, so after management charges. They're borrowing at 4%, half the money. So they're getting a leverage yield of 12%, let's say, on the rents. They're looking at capital appreciation on the asset Generally, it's been 10% per year regionally over the last number of years. But even at 5%, let's just take 5% as an annual capital appreciation. Don't forget they're borrowing half the money, so now their equity is getting 10% capital appreciation on top of the 12.5% or 12% leverage rental yield. So you're up over the 20% return immediately just with a bit of leverage. Why is that? There's modest capital appreciation in the market still, and there's very strong yields, which is the key bit. Now, why does it work in a pension and the cash flow doesn't work personally? Well, the reason is primarily taxation, the ability to service that debt piece, the ability to get the initial equity piece, the initial 50% together to invest. So that's working really well. It's also working well because I suppose of the last 6 months, investors are looking where to put their money in inflationary times. They've seen what's happened in the stock market the last few months. Dare I say Bitcoin, they've seen what's happened to that. In inflationary times, what's a good place for your money? When inflation, I would imagine, is linked to significant to salaries. We see people in inflationary times pushing up their salaries. It's another input into property. So certainly from my perspective, there are a whole load of reasons why we're seeing an exodus of landlords out of the market. I'd submit they're in the wrong structures. They're not set up the way they should be set up. And actually, it's a really good time to be a landlord in this market for as long as those yields remain as high as they do. And I can't see them changing too quickly in the short term.
Okay. Thank you very much, Angus. Okay, I'll open it up to the floor now if anybody's any questions. Just mindful that we're 9:33 and promised to have people up by about 9:45. But if anybody's any questions, happy to take them now. Okay, and Ronan, just one last question for you, bearing in mind that it's All Ireland final day for statisticians with the census results. You know, we've seen from our own lending. You know, we lend to buy-to-let investors that want to buy investment property, but we set a floor on population centres of 10,000 or more. There's a very good reason for that. You know, buy-to-let is an urban product. In terms of what you're expecting to see from this census, are you expecting to see, a significant increase in populations around the country, regional populations, and there's between 15 and 20 towns around Ireland with populations, so between 5 and 10,000, and I think we might expect to see at least some of those move into that 10,000 and above category.
Excuse me. Certainly, it's an interestingly timed census. It's effectively pre any Ukrainian influx. Not completely, but it's it was the 4th of April, so the numbers will be small, but it's post COVID sort of reshuffling of people. I don't know how many are going to, if 10,000 is a strict cutoff, I don't know how many are just going to sneak over the line, but I would expect there to be quite a lot more growth in that category of say 5 to 15 or 20,000. They're probably going to be growing faster than the bigger towns. We're going to see that between 2016 and 2022, and I suspect it's being driven in large part by what you might call a COVID reshuffling. Even looking at, you can sort of see it implicitly in the price indices. So underpinning the draft reports is 54 markets around the country, and I was looking through the numbers last night because that's how I spent my free time, and Wexford and Cavan, to pick two examples, have seen very significant increases in prices over the last 2 years. Donegal as well. Donegal had seen actually very small increases after 2014, in part I think because of Brexit fears. But I think it's gone from something like, from lowest point up maybe 35%, and it's now up about 75% in a pretty quick period of time. And that's no longer kind of international commuters, he said politically contentiously, people going from Donegal to Derry on a daily basis. I think it's more to do with people within the Republic, kind of looking at places that were cheapest and moving there. We'll know later today. I'm like the guy who's the match has been delayed and he has to fill in with a bit of punditry. We'll know later. We'll know later today. But I wouldn't be surprised at all if that category has seen the fastest growth.
Yeah. No, thank you very much.
Sorry, I have just one question. Before. Does the panel have an opinion on change of government and majority Sinn Féin? Do you foresee that the caps on rent or even forced decreases would become
I have the mic, so I'll give it hopefully a quick answer. It is a little bit hard to figure out what exactly Sinn Féin would do if they were the major party in government, because they seem to be saying lots of different things to lots of different audiences. So they'll meet with developers and say, don't worry, we're not talking about taking your property from you, we're talking about a healthier housing system. But then the very next day they'll be out saying something that sounds like the opposite. So it's a little bit hard to figure out what exactly they mean. But I would expect them to stay in what are known as second generation rent controls, which are around rent increases rather than rent levels. But they could put in a pretty binding one. They could say no increases, or they could say increases of no more than 1% a year. I wouldn't be surprised if they tried a rent freeze. Excuse me. But in other areas, they've shown remarkable degree of what you mightn't necessarily think of as left-wing policies. I think the policy on corporate taxes, they're going to go all the way from 12.5% to 15%. So I suspect there's a lot more pragmatism there than they want to necessarily show to the electorate. I'm a natural born optimist, so maybe I'm wrong.
Okay, any other questions? Okay, so look, we'll leave it there. The presentation has been recorded, so we'll be sharing that through various different channels. And if you want to follow us on social media, that's probably the best way of getting access to that. Thank you very, very much to everybody that attended here today. A special thank you to the DILOSC and ICS Mortgages team as well for arranging this. Just really fantastic job. And a special thank you as well to Ronan and Breen and Rowena and Angus for coming along and sharing their thoughts today. Thank you very much.